how indicators work. And this is a subject for our webinar today. Once again, my name is Angelo. Happy to be the presenter of today's webinar. There will be a part at the end where you're going to vote as well. Give me your feedback of how much you like this webinar itself as content and how much you enjoyed me as your host. If you want me to be replaced, for example, hopefully not, because I enjoy doing them. Okay, here we go. It's blurry. Yeah, I know it is blurry, the background behind me. Hopefully my face is not blurry. This is my real face. But we have a new camera setup now, so it's a bit blurry behind. Hopefully next time will be much better because we'll be using a different software next time as well. Cool. Right. Well, let's get started. Do take a few seconds to read the disclaimer here. You can see on the screen. This is a little warning with regards to the trading and the risks of trading. Very important message I always want to give to you guys is to never trade with money you can't afford risking. There is risk. Hopefully you'll all make loads of profits and lots of successful trades, but there always is the counter side to that where you might not be successful. So don't risk money you can't afford to risk. Very important message. Okay, so as I mentioned before, stay tuned, Q&A at the end, and there's a special Q&A when we will cut the recording, and the recording will be available, as I mentioned. There will be a segment after that, hopefully 5-10 minutes, maybe more, for the live audience who took the time to watch this webinar live. Your questions will be answered, especially at the end there. Okay, here we go. First page, first slide. What are indicators? Very, very straight to the point subject here. Now, technical indicators are heuristic or pattern-based signals produced by price, volume, and or interest of an asset. They are used by traders for the following technical analysis. Technical analysis, guys, simple. It is everyone who uses these indicators is a form of technical analysis. And if you do use indicators, you are a technical analyst trader. So by analyzing historical data, technical analysts use indicators to predict future movements on price movements, basically. That's what the indicators do. A very simple explanation here of what the indicators are designed to do for us. They take information and they give us certain data which we can use to trade with. It doesn't work always, of course, but it is proven to be better to use indicators rather than not use indicators and just trade with your emotions. Emotions are not what win trades, unless you're super, super lucky, which I never am. Technical analyst is an analysis method for forecasting the direction of price through the study of past market data, primary price, and volume. This is just information for you guys to know what indicators are. So if anybody asks you what are indicators, this is an answer. So if you're ever passing a test about indicators, you can copy paste this. And you can memorize it as well for you to know as well. Now, this is where we get into the meat of the webinar and the important stuff where I want you guys to be very, very attention. Okay, the video's okay, but the chat box is okay. Lacking. Ooh, okay. I'm hoping we're going to get this thing sorted out, guys. Hopefully next webinar will be much, much better for the new software. So types of technical indicators. If you guys know anything ahead of me here, let me know. There are two types of technical indicators, and here we go. First one is leading indicators. They attempt to predict where the price is heading. So it is what it sounds like, leading indicators. They lead you into a certain direction. They have information, of course, like the lagging ones, which are the next ones, but these ones are more used for predicting where the market is going to go next. So these ones would be, if you imagine a gun, this is the trigger, where you are pulling the trigger to place your trade in. Lagging indicators, they offer historic background or report of background conditions. So it's more like looking what happened so far. There you go. Somebody wrote there as well. Sarah, well done. Lagging. Yep. Lagging indicators. They show you what has happened so far based on the thousands and thousands and thousands of trades that have been placed in the past, the market movements of the past. It will show you a certain pattern, a movement, what happened before. And based on that movement, it gives you the information to predict what's going to happen next. Doesn't always happen the same way because there are things that happen on the market sometimes that are a bit spontaneous. No one can predict an earthquake, a tsunami, or something like natural like that, collapses, financial problems. But that part is the part that is untraceable, that can spin the market in a direction for unpredictable. But on a day where there's nothing going on, just standard market movements, people buying, people selling, that's where these indicators can come into play and help you significantly in predicting where the market's going to go to make your trading a lot more successful. Now, from these two categories, leading and lagging, we're going to break it down into 4 further breaks. Trending indicators, it is what it sounds like. Momentum indicators, volume indicators, or volatility indicator here, and then is the volume. So 4 subcategories from these lagging and leading. Now, what we are going to be looking at today is ways of trading with using one indicator from each one of these groups. Many traders might be familiar with indicators. If you are and you do use some, now's the time to write in the chat what indicators you like. Bollinger Bands, RSI, stochastic oscillators. If you are a bit more advanced, maybe you're using Fibonacci lines for retracements or for extensions. If you are, let us know in the chat what you are using. And what I'm about to show you right now, this is stuff you can adjust for yourselves, of course. I'm going to be showing a certain setup of indicators here using one of each of these 4 categories. You might be familiar with not, for example, the parabolic. You might be familiar with something else on that list. Definitely use the one you are familiar and comfortable with. Okay, so now let's move on. Let's show here they are. Trend indicators measure the direction and strength of the trend by comparing price and establishing a baseline. Momentum indicators may identify the speed of price movement by comparing the current closing price to a previous closing price. So you get an idea of the momentum of how fast the market is moving. Volatility indicator measures the rate of the price movement in regardless of the direction. So this one is good for you to know how much money is put into the asset you're following. If it's Euro USD, for example, there might be a massive red candle which has a huge wick on each side. This will show you basically all the money put into this currency pair. The body of the candle might show that to you, might not show that, but if you see the volume volatility indicator, it will give you that. So extra information, very useful always. And of course, then the last one is the volume one, which measures the strength of the trend based on the volume share traded. Okay, Bollinger's, I see somebody writes there. Someone is using Bollinger's, Solomon. That was my first indicator. The first one my brother ever showed to me, and he unfortunately showed it to me very incorrectly. So I ended up not getting the best of starts to my trading. Make sure always, guys, any indicators you're familiarizing yourselves with, make sure you're getting the right information and you're not using something based on wrong information, because that's not going to help your trading. It'll make things worse most times. Anyway, the option is trade. Not understanding that question very well, Ramandeep. Anyway, the option is trade there. Well, we will show on the live account again how everything is done. So don't worry, we're going to move on and you'll see how everything is set up as well. How to choose the indicators now. This is the part where we are going to be showing you where to find the indicators and how to choose them. So first you may consider focusing the effect into 4 categories of the market research: trend, momentum, volatility, and volume. There's a little picture comes up here that shows. So there is what we're looking at here. This here is where you're going to click to find the whole indicator setup. And as you can see here now, there's momentum, there's trend, there's volatility, there's volume. There is also moving average lines you can use as well if you are familiar with them. Once you have added the effect for each category, now you may begin processing or tweaking input to match the trading style or volatility. Every trader is different, right? Some people here, as I see, are using fractals and moving average. Very nice. Other people, as I see here, Alexander is using Bollinger Bands, parabolic, MA100, and MACD. So I'm guessing, just a very, very loose guess, that Alexander is not trading today for the first time. I think Alexander has some experience with trading and he's using a very good setup. Now, don't be disheartened. If you're not as advanced as Alexander here using such a advanced setup, you will get there. Don't stick to what you're using. Don't be shy to experiment. The light bulb was not invented in one day, right? So you are going to have a bit of darkness. You are going to have a bit of losses. That's why we have practice accounts. Practice new setups, practice new ideas. Once you see that things are working, you're getting good results, lightly, gently bring it to your real account. That's very logical. There's not going to be profits, of course, in the practice account, but it's going to not give you losses, which is more important. Once you're comfortable and you're happy with your setups, that's when you go for it. Okay, next slide. This is what it's going to look like now, right? Once you do go here, you're going to click on the indicators notification here, as you can see in the little circle. Then you're going to first choose momentum, and from momentum, this is my personal favorite from the momentum group, the RSI, and there is a little explanation here as well what the RSI does for us. All right, that's it there. So you're going to choose this one, default settings, no changes to it, and you're going to implement it onto your account. Next one, you're going to go again back to your indicators down here. We're going to do all of this on the live account in a few seconds, so you're going to see exactly how it's done on the live. And trend indicators you're going to choose next. Parabolics is the one I chose for this explanation here. If you're familiar with any other ones here, Q-stick, vigor, you can always use the ones you are familiar with. For the example, I'm just going with parabolic. What I'm trying to do is get one from each category I mentioned above. So momentum, trend, next one is the volatility. So there we go, just click there, the volatility indicators will open up. And I see a couple of guys mentioned Bollinger Bands already. So for the example, we are using Bollinger Bands as well. So it will be good for you guys to, since you're familiar with it. And there's again, explanation for the Bollinger Bands. And then last one, volume. From the volume, you have a choice here of which ones you like. My personal favorite is the widget down here, the volatility, the volume indicator on the widgets. But for the example here, we're just going with the WWV, Weis Wave Volume. And again, it has a nice explanation there. So once you have done this, once you have chose your indicators and you have the whole setup you wanted, this is what's going to look like. And let's be honest, it looks a bit like a mess. It looks like a lot of things going on the screen. And the important thing is to understand what you're getting from each one of them. Now, as we mentioned earlier, the first thing I said when I said about leading and lagging indicators, the lagging indicators show us where the market is coming from. Leading indicators like the RSI is what show us where the market could be going. So this one for me is the most important one from the indicators I have. Great to see the volumes here from the WWV, and this will show us the volume being traded. You can see little pyramids climbing up, and each direction as well it shifts. So volume goes up and down in brackets. So this shows me how much money is put in now right now to the trade I'm looking at. Australian dollar USD is the example. So then next one is the Bollinger Bands. Bollinger Bands is a tricky one. Many people use it for many different things. The primary design of the Bollinger Band by Mr. John Bollinger himself, who created this thing, is the outer ones, the red one up here and the yellow one down there. These two lines, when they are moving away from each other, this is a sign that volatility is picking up. Example A would be at this point here where it comes very narrow. They're tightening in on each other. You can see how close they are here. Volatility is slowing down. Then when they're moving away from each other as they are here, you can see it's getting wider, and here's a massive gulp. It just opens up like a little barrel. That's a sign that volatility is picking up, and you can see it very clearly here on the candles as well. Look how big these candles are at this moment comparing to how small they were when it was narrow. All along this channel, how narrow they are, and here you can see the big candles flying in when more volatility comes in. And then parabolic, a very simple, very aesthetically pleasing indicator, stays above or below the candles, and it shows you basically a direction or where it's going. Now, there's my favorite one as well, the RSI. This one will show us the asset is overbought and oversold. If it's on the upper side, like it is up here above the 70 line, the green line, this means it's overbought. The price is overvalued. Something, let's say, for example, you see some nice shoes, you will like them very much. What are these Jordan Airs, I think they are, or Jordan shoes, like $600-700 a shoe for the original ones. Crazy prices. That's, I consider overpriced. So if this had an RSI connected to those shoes, it would be way up here, overvalued, overpriced. So if you bought those shoes though at a cheap price, when it's all the way down here, let's use this as an example. So oversold means it's way down here on the bottom. So once it touches this line, it's a sign that it should be worth more than it is right now on the market. So if I'm interested to buy something, I can see it as a very good price, a very good sale, a discount. That's when normally people buy stuff on sales and discounts. So if you see the Australian dollar and the US dollar is very cheap, it's all the way on the bottom here, that's a good sign that very soon others will identify that as well, and they'll start buying, and you can see the price starts climbing. And there's something you can notice as well. If you see the RSI, for example, here shows this movement here has climbed. So there's from that point to that point a climb. If you don't see the same thing in the markets, we actually do see it here from here to there. That's that to that. And then it goes down again. So the RSI is moving in coordination exactly with the market. But combining all the information together is what's going to make our trading significantly better. Okay, so keep attention on that one. I think the next slide is, parabolic shows the momentum. Bollinger Bands will show us the volatility. And now we're going to go to the live account so I can show you how things look when we're setting things up. Okay, this is what I have pre-done for Bitcoin. Let me just take away my graphic tools here because we're not going to be really needing them right now. If there are any traders who like Bitcoin out there, keep an eye on it as it is going sideways right now. As I just to show something before I get to what I want to show, this is something I prepared for myself more or less. Long downtrend is on a daily candles. There's a long downtrend on Bitcoin that reached sell point. We have the ultimate low is a bit further down here. So let's say the all-time low is 32,000, just under 33,000. But aesthetically, I think it's better here because we see another touch coming at this point. So it is in a nice little channel here, moving sideways in this corridor. High price being the 45,000, low price being the 35,000, and it is trending in this corridor now. But we might be seeing this moving out of this corridor pretty soon because it has touched multiple times. 1, 2 touches on the bottom, and there's 1, 2, 3 touches on the top. Might touch a couple more times. Market is more or less in the middle right now, so over the next couple of days, it might come and touch again and stay in. But very soon, I am expecting it to all burst upwards, hopefully in a pattern to all-time highs where it was up here, 69,000. Or if we are unlucky, maybe Bitcoin will fall under and go lower to under 30s, but I doubt that. Right, let's get rid of those and let's start putting in our indicators, which we mentioned. Momentum is the first one we're going for, and we said we're going to choose from the momentum, where was it? Relative Strength Index, RSI, and we're going to apply it on default. There it is on the bottom here. I'm actually going to change this to something more relevant. And I'm not mistaken, there's quite a few people who are binary traders. This is a cryptocurrency, but the same thing exactly can be done on binary, right? These indicators are set up for everything. Different time frames, of course, on your trading, but it can be for anything, whether you're a 1-day, 2-day crypto trader, binary trader, digitals, everything. So my moderator team, by the way, are helping there as well. They're answering questions of yours. So if you do have any questions, do let us know anytime now, or maybe on already, I can't see. There is going to be opportunity for you to rate the webinar and give us your feedback about myself, your presenter, and the content. So please take a few seconds when you do see the poll on the screen. Do give us your honest opinion there. Even if it hurts me and breaks my heart, we want your feedback, please. So momentum, we have it locked in. Trend, we're going to now choose from the trend indicators here. We went for the parabolic SAR on the example. No changes to it again. On default, there it comes on the screen as well. Then we're going to go again here. Now we went for those ones. We're going for the volume, volatility now. For the volatility, my good friend, Mr. John Bollinger's indicator. There we go. Plotting it in. Again, no changes, default. I'm putting things on default, but of course, if you are more advanced with your trading, if you have experience with trading and you have a different setup with one of these indicators or multiple of them, by all means, use the ones that you're comfortable with. That's obvious. Use stuff that you're used to. And then last one we're going for is the volume. And for volume, we said we're going to go with the Weis Wave Volume, and we're going to apply as it is. There it comes on the bottom. This is what it looks like. So, like always, as I mentioned, look for opportunities. Now, this one might not be such a great example right now because it is 1-day candles, and as you did mention more or less just from the graphic tools before, I could see it's in the middle of the trend. RSI shows that as well, right? It's right slap bang in the middle of the overbought and oversold. So the value of it more or less is the actual true value, let's say. 40,000 is a decent price, good price, let's say the real price for Bitcoin. If it goes up, if it jumps up all of a sudden to 45,000 in the next 15 minutes, then you may consider it overvalued at that price. If it comes plummeting down to 31,000 all of a sudden in the next 15 minutes, again, you may consider that oversold, like it's undervalued. It should not be that low. So people could expect it to jump straight back up again. That's why we get to see these big wicks many times. Market gets sold very, very fast. People realize that the price should not be that low, so they jump on the opportunity and buy it straight back up again to something more reasonable. Okay, now next thing important to do, you have now set up, for example, these 4 indicators. You don't want to log out, come back tomorrow and have to redo it all over again. So for that, there's a very good little solution. You go to your indicators, you go to templates, and you can save it in your templates. So added, there they are, the 4 indicators. Save indicators as a template. You write here the name of what you want to set up. I can put this, for example, as a 4 indicator for indie. So yeah, for indie, let's just go with that and save. There it is. Anytime I want to use it now, I just click on that and it will set things up. For example, let me just go to let me just see, oil. Oil's been really going crazy nowadays with the situation going on in Ukraine. So that's a good example here. This is 1 hour candles. And as you can see, I have nothing on my screen. I can just go straight away to my indicators, go to the for indie, and there we go. They're all on my screen now. And this is a very good little example here. And this is a very interesting pattern here, guys. Look at that. This is in the last 24 hours, more or less. Massive spikes again in gold, in oil. This, I believe, was to do with the fears of Russia being having a very low supply of oil for reasons which I can't fathom. It's reports that Russia has low oil, so it jumped up a quite significant number. It did drop. Oil did drop from the highest points we have seen when it was $126 per barrel of the WTI, dropped all the way down here, as we can see, the lowest point, which was recent 92, and that started an avalanche. This is a good example here of how our indicator setups works. Taking it from this moment here, the trends shifted direction, hit the low point here. RSI didn't touch all the way on the line on the RSI. It came very close to it, but from that moment on, the trend is lagging, as we said. So these ones are trailing behind. Look at the Bollinger Bands, how they widened at this point there. So this would be a good moment where you see the Bollinger Bands widening. The RSI started picking up already. And at this point here, where you see the parabolic shift to the bottom, you see a narrow little band and prices climbing, RSI climbing. This would have been a decent entry point. When you see the candles as well, expanding upwards, parabolic stays far below it. From that point down here, where you may have opened a trade at this moment here, let's say, when the RSI started climbing, would be a good one. When you see the parabolic joining in as well, you could use that. You can see the Weis waves as well, the volume here picking up significantly, so bigger and bigger ones each hour. So this is an hour example, but the same thing can happen on smaller ones, right? 5-minute trading, 1-minute trading. When you're using 1-minute trading, for example, for traders who are using 1-minute trading on binaries or digitals, you should set things up on 15 seconds. So if you're doing 1-minute trading, then I would say do this, come to the 15-second candles. There will be a lot more noise, a lot more interference, so be super careful with it. Main focus on the RSI. Moments like this where it touches, for example, on the top of the RSI would be a good go point. And that one there, for example, would have been a good trade because we're always counting 8 candles. RSI got touched on the top here. So as soon as you see the candle retracting back in, you could enter at this point there. This little green candle on that. 1, 2, 3. So 1, 2, 3, 4, 5, 6, 7, 8. This point there would have closed the trade, so that would have been a winning one if you did a trade on this as an example, as a binary here. But the main focus is the RSI, and the others will just give you extra information where you see where the dots are landing, volatility picking up or slowing down. So very important. Get familiar with these. If you're a beginner with trading, maybe it might be a bit overwhelming starting up with all 4 of them together. So you can start with 2 of them. Start with the Bollinger Bands and the RSI. Then add into it the parabolic as well. Then add into it as well the next day the WWV. So slowly, 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 slowly. And again, if you're familiar with other indicators, use the ones that you are familiar with. That's the idea of this. Simple stuff, guys. This is the part 1 of how indicators work. So this is more designed for people who don't know how to use indicators at all, or are not happy with the indicators that they are using and are looking for something different to work with. So this is a good one to go for. The next webinar we're going to be having on the 4th of April is a webinar where we're doing something different to what we have been doing so far for the market news webinars. This one's going to be more about the current situation going on in Ukraine, a very sensitive subject. Like everyone, I'm not a fan of war, and it's tragic and horrible to see human beings killing each other in this manner for petty reasons as we are doing now. But with regards to trading, there are opportunities always. Whenever the market is thrown into something unpredictable, whether it's a natural disaster or something really, really good, then markets do move accordingly. If, for example, tomorrow they discover a massive gold deposit in India, then that's going to be huge, right? The value of the currency should most likely shoot up. Job opportunities will shoot up. So something positive, for example, there can spontaneously change the market. Maybe if it's a reported to be the hugest, biggest gold deposit ever, then maybe that means that we just found that there's a lot more gold out there, and the value of gold goes down. So there's lots of things always to consider in good and bad predicaments and bad situations. So 4th of April, same time as today, we're going to do the next webinar for the current situation in Ukraine. We're going to take a look at the current situation there, and we're going to try and compare it with other situations, other wars that we have seen in the last 10 to 20 years. Right, that's covering this. We are going to come back to the live account if needed. For now, we're going to go back to the presentation, back to the webinar, and we are going to get to the Q&A part, I believe. Now I think this is the end of it. Yep. So Q&A part. This is where I get to share with you guys my face again. I'll be looking at some questions that my moderators have collected. And let me see, stop sharing. There we go. There's my face with the blurry background. We are aware of it. There is something, I think, with the camera settings we're using, and I don't want to mess with it because I'm not very tech savvy. But yeah, let's get back now to the webinar itself. And okay, let me just drag something over to my screen so I can see these questions now. Okay, here we go. You can still see my face. That's good. Okay, how to deposit? Adekoya Mohammed asked how to deposit. Well, that's a very simple question. Deposit with e-wallets, credit cards, depending on your region, where you're from. Mainly easiest way is credit cards, but always be careful to use the credit cards that are in your name, not relative credit cards, not friends' credit cards. Use your own credit cards. And as soon as you do verify them. There is a verification process for credit cards. Send in to your login, send onto your account a photo of the front and back of your card with some important information hidden. Speak with support. Speak with support to exactly explain, or when you do go to the deposit page, there should be an explanation there as well of what is the requirement. Your questions, guys. I'm going to be answering lots of your questions on the live chat. As you can see, more questions are coming in here. I'll be paying a lot of attention to that in a few seconds. For now, we're going to answer some questions my moderators collected. Then we're going to end the recording. Everyone can watch this recording as many times as they like. And I'll be focusing for the next 10, 15 minutes after on the live chat for the lovely people who joined this webinar live. I'm going to dedicate some time to them, which will not be included in the recording. So let's go back again. Sadeep, we have money management. Okay, we need money management. Well, yes, Sadeep, very much good point. Very good point. Money management is super important. I think we have done a webinar about money management. If we haven't, we'll definitely put one in the schedule. There is going to be a link that hopefully my moderators have shared with us on the chat where you can watch previously recorded webinars, a whole bunch of them. So if you want, give it a look. There's loads of very good webinars there for you guys to watch. Do check them out. Money management one, if it is there, if we have done it, then definitely give that a good watch study. If not, then we will definitely put that on the schedule to do another one of those very soon. Okay. Can you explain the difference between volatility, volume, and how they are related? Harrison. Okay, nice one, Harrison. Volatility, volume. Volatility means basically how volatile something is, right? If the price is shifting very fast, if there's lots of people trading, means that the volatility is shifting. If, for example, there's if you go to an auction house and there's an item which is not something spectacular, nothing fantastic, there might be one or two people bidding on it, but the interest, the volatility on the asset is not really shifting much. It's barely moving. One person offers 10, 15, 16, 17, and it's sold for 20. Then maybe the next item is a very beautiful item and all the room is interested. Everyone's shouting out, I want it, no, I want it, I want it, I want it, I want it. So 10, 20, 40, 100, 200, 300, and it gets sold for 10,000 at the end. That is volatility. Lots of people interested, lots and lots of volatility. Volume, this one is a bit different because, again, it comes down to how much in quantity. We're measuring the quantity now of how much this asset is interested. There might be lots of interest in something, but people are making small little bits. I'll buy one, two, I'll buy another one. And then might be another asset where there might be huge numbers of volume, where one person says, you know what, I'll buy 10,000 of them. I'll buy 50,000 of them. So that's a much bigger volume. That's the main difference. That's the difference between volatility and volume, Harrison. How they are related? Well, they more are related as well, in a way where if something is very, very popular and very expensive, then volatility will be high and volume most likely will be high as well. Let's use an example of Apple. If Apple stocks start to rise dramatically, you'll see the volatility is climbing significantly. Volume is climbing super, super fast as well. And obviously it's because most likely they dropped an EPS report that smashed the forecast. And everyone who's interested in stocks, stock traders, are going crazy. They see Apple as a great buy. Everyone's buying. The price is climbing. More people are triggered. And the next thing you know, the volume, the volatility, Bollinger Bands, for example, be very widely spread. The volume indicator with the WWV will be off the charts. And there you go. You got a very good opportunity there to hopefully get involved in the trades as well. Okay, a couple more here. Okay. Mithu is asking here, what do you think about martingale strategy? Ooh, okay. Well, this is an interesting one. I was never, ever a fan of martingale. Nothing against Mr. Martingale, who developed this strategy. For me, it's one which is very, very high risk. The idea behind a martingale, for people who don't know what martingale is, just to bring everyone on the same page, it's a trading pattern where you make an investment, you do your initial trade. If it is unsuccessful, you double that trade. If that one is under the previous one, so you did, let's say, a $1 trade, the next one will be a $2 trade. There's different approaches. The most common one is then you triple the next one. So if you lose the second trade for $2, you put together the previous two. So you lost $1, then you lost $2. So the next trade will be a $3 trade. If you lose that one as well, then you're going to go back and say, okay, I lost 1, 2, 3. So the next trade will be a $6 trade. And just keep on doing that until you win a trade. Now, if you do have a big account, if you have an account with $5,000, $10,000, and you're starting small with $1, $2, $3 trades, then there's a good chance that you could somehow pull it off. Problem is, I love statistics, I love numbers. And stats show that martingale has around 90% success rate. Now, if you're doing martingale once only, never again, 90% is not a bad odd. Problem is, if you're going to do martingale every day and you're trading, let's say, 20 days in a month, that more or less guarantees that once or twice you're going to lose the martingale. And a problem with that is that martingale, it's a painful one. When you have an unsuccessful martingale that runs for 10, maybe more trades in a row unsuccessful, you can have very big losses as a result of it. So if you are planning to use martingale, if you are using martingale and so far you're successful with it, be careful. Be very, very careful. Start small. If you do like it, I wish you all the best of luck. Personally, I am very, very weary of it and very worried of it. So be very, very careful with martingales. Okay, 35 minutes I see on the timer, but we did have some issues at the beginning of the webinar, which will most likely not be added in. So I think we're still good for a couple more questions for this webinar recording. Okay, how to use indicators in 1 or 2 minute trading. Santhi, this is Santhi Kumar asking this one. Very easy, guys. As Santhi, we showed this. The important thing for 1 minute, 2 minute trading, it's choose the same indicators more or less as we showed. Choose, if you are new to trading, choose 1 or 2 of them. Start with the Bollingers and the RSI, then add another one in from the other brackets. And the important thing is the time duration. Have your times on 15-second candles, maybe 30 seconds maximum if you're doing small trades for 1 or 2 minute trading. The longer the trading, the bigger the candles can be. The setup is used for everything, right? So Bollinger, like I said, if it's digital options, binary options, forex, crypto, well, no matter what you're trading, you can use these indicators. So let's see, what else do we have here? We answered that one. Ignatius asks, does the indicators work always? Beautiful question, Ignatius. The answer, unfortunately, is no. This is something we have to be straight up and honest with ourselves always. There is no such thing as an indicator that works always. Imagine what would happen if there was. If Angelo, me, I was to invent an indicator which gives you 100% guaranteed success. Overnight, everyone trading would become stupid rich, crazy rich. The whole planet would go to waste. I mean, I would not be coming to the office to do these webinars for you if I developed an indicator which guarantees me to win every trade. I'd be trading all day, every day, becoming a millionaire and moving somewhere beautiful and warm and sunny. So unfortunately, such a thing only exists in our fantasies, guys. So Ignatius, there is no such thing as a perfect indicator that gives you 100% success. There are very, very good indicators that we can get very, very comfortable using. And the better you are with the indicators, the better your success rate will be. You'll still have some losing trades, especially if you're doing binary and digitals, which are a lot more volatile. But the point is, if you have, let's say, a 60-40% success rate, every 10 trades you do, you win 6, you lose 4. By getting better at the indicators, using a better setup, you can maybe soon turn it to 7 and 3, 8 and 2. Once you start hitting 8 and 2, means you're winning 8 trades, you're losing 2 trades. If you are using money management, as Sadeep said earlier, very, very important, use good money management, then you can control your trading better. You know your target for the day is to make $200. Each trade you're doing is a $20 trade. That's beautiful and simple. You win a trade, you win another, you win 5 trades in a row, $20 on each trade, you're up to 100 profit. You lose a trade, fine. You then win the next 4 trades in a row. Before you even know it, you hit your $200 target, maybe an hour, 2 hours, doesn't matter. If you have time available, set your times or your profit targets to the time you have available. If you have only 1 hour to trade today, aim for something smaller. Aim to make $100 profit if your normal target is 200. And again, money management, this is what we're talking about now, but if you are using money management, I always say a good target is 20% of your current balance. So if you want to make $200 profits, then you should have $1,000 on your account to work with. If you have $100 on your account, you should be aiming to make around $20 profit. So your trade should always be accordingly to what you have on your account. If you have $100 on your account and you lose $2 on a trade, it shouldn't devastate you. It shouldn't really upset you or drive you aggressive onto your next trades. But if you have $100 on your account and you do a $30 trade and you lose a $30 trade, that might trigger you. It should trigger you. It most likely will. And you'll do a bigger trade, a more aggressive trade. If you lose that one too, you're going to be very, very angry. You might be tempted to do the next trade, an all-in trade. And if you find yourself doing that, that definitely means you're doing something wrong. Dial things down. You have 100 on the account, do $2, $3, $4 trades, no bigger. Okay, let's move on to something else here. Another question. I hope that was useful, Ignatius. I went way off your point of the question about indicators that was working, but I think that was important. Okay, please demonstrate in digital trading 1 or 2 minute trading. Santhi, okay, let me see if we can do a little demonstration here. Give me 1 second. Okay, let me just get this right. 1 second here. Okay, and let me see if I can share again. Share your screen. Okay, that's not right. Let me just go here. There we go. That's it. That's it. That's it. Now you can see my account. So 1 or 2 minute trading. This is the same setup we had as before. So 15 seconds each one. Now let me just find a currency pair once really, really fast. This will be a fast example because I think we're running out of time. Euro USD on digital options. There's our setup. There's the trade. I'm tempted to place a trade if we do see an opportunity for it though. So we're going to bring it into 15 seconds each candle or 30 seconds each candle. And our main focus is on the RSI. That's the one down here. And as we can see, it did touch at this moment there. So when it did touch here, you can see that was a good trigger just by itself. But what I'm seeing, volatility is low. Bollinger Bands are quite narrow compared to how it was before. Parabolic just shifted from above to under, meaning the market is expecting to start climbing based on the parabolic only. Came very close to touching at this point. That's very nice. Volume, the WWRV is showing positive. So this could be a good opportunity for an example. Let's push it to 1 minute. There we go. I missed the opportunity there. I was hoping to catch that little movement at the bottom there. Anyway, the point would be, once you saw this level out there, let's actually get in just for the point of it, because this would be a much better entry down. There we go. Let's see at that moment, because this is on the RSI line. This is the good indication. We can see the Bollingers are still narrow, which is not the best of moments. So this is an example. I hope you guys are seeing. I hope I'm sharing my screen correctly. But you see that was the entry just based on the RSI mainly. Volume is a bit worrying for me now that the volume has slowed down and a new wave has started. Parabolics are in sync. Bollinger Bands are starting to open up a little bit, which is good. Not so good now, they're narrowing, but that just shows me the volatility levels. And the main thing was the RSI there. I saw the RSI touching the line, so that was my main trigger. And okay, I think there's another 15 to 30 seconds after this. Yeah. So normally, the reason why we choose the 15 seconds is because we want to count eight candles after. So you enter the trade on this candle moment there. First candle, second, third, fourth, fifth, sixth, seventh, eighth. Eight candles more or less is what we're looking for when we're using these setups. Okay, 10 seconds to go on this example. I hope this was what's an inverted hammer? John asks. Well, John, noticing that off screen on the chat, there's a question about inverted hammers. If you like hammers, morning stars, shooting stars, indicators, candlestick patterns, we have a webinar coming up very soon about that. This example here was a successful one. It was a massive green candle that blew up at this point. Look at how the volatility picked up here as well. So yeah, that's it. That's simply how we use this the setup. Just make sure you are tuned in here to the 15 seconds if you're doing binary or digital trading. And simple as that. Doesn't get any simpler than that. Okay, right. I'm going to go back again now to my face, as we're going to be saying arrivederci to the recording. I hope you guys find this webinar useful. I hope you find the information useful for your trading. Tune in for the next webinar, 4th of April. We're going to have a webinar on the war and the situation with the Ukraine and Russia. So do dial in for that one. I'll be spending some time now with the audience on the live chat, around 10 minutes, and answering some more questions from the live. So thank you very much, guys, for watching the webinar, and see you on the next one.